One of the most common questions that newly retired people have is, are Social Security benefits taxable? And the short answer is, it depends on your level of income. I'm going to break it down for you today with some examples. I'm also going to introduce you to a free resource so you can quickly determine this answer based on your own specific circumstances. That's what we're talking about. Let's get going. Now, let me start by saying that this is a relatively technical subject. In fact, the IRS has a 33-page publication which deals with nothing but the taxation of Social Security benefits. But I'm going to try to keep this as simple as I can. I am going to start with the more technical aspects of this calculation. If you're a little bit confused or if it feels over your head, stick with me, because in the middle, I'm going to show you a free resource which is very user-friendly. You don't need to do any calculations. It's kind of a quick reference to show you, based on different combos of income, how much of your Social Security is likely to be taxable. And at the end, we'll look at a handful of examples. As I mentioned in the intro, whether or not your Social Security benefits are taxable depends on your level of income. But unfortunately, it can't be just one line, simple line item off your tax return that makes this determination. There's an entire calculation that goes into this. To try to keep this as simple as possible, what the IRS uses to make this determination is this concept known as provisional income. And this simple formula is basically all non-Social Security income. So basically your gross income plus any tax-free interest if you're someone who owns municipal bonds, and half of your Social Security benefits. This is the number that is ultimately used and compared against a couple income thresholds, which we're going to look at next, which determines how much of your Social Security benefits get taxed. Next, let's take a look at the income thresholds. So here they are. The top table is for joint filers, the bottom for single filers. Let me just point out a couple things. Again, if you're a joint tax filer and you have provisional income of $32,000 or less, none of your Social Security benefits are going to be subject to tax. But as you can see, as your income goes up, more and more of your benefits become taxable. Now, let me note one last thing before we move on. These thresholds are not rigid breakpoints. So, for example, if you are a joint filer that has $32,001 of provisional income, you don't go from none of your benefits being taxable to all of a sudden half of your benefits being taxable. It's a gradual increase, which we're going to see more next when I show you this free resource or quick reference guide. All right, if you're feeling a little confused or maybe intimidated by this idea of calculating provisional income and these various thresholds, don't worry. The good news is you don't really need to fully understand these things. The next thing I'm going to show you is a free resource. This is something I custom built. It's available on my website, and I'll leave a link in the description if you're watching on YouTube. What this shows is a quick reference guide for how much Social Security is going to be taxable given different combinations of income. And the beauty of this is there's no calculations involved. Basically, you just cross-reference how much your Social Security benefits are against how much other income you think, and you'll get a number. So let me throw that up on the screen next, and I'll show you how to read it. All right, so here's the free resource. Again, this is just a one-page downloadable PDF. The most important thing to focus on are these two tables. Okay, the top is for married filers, the bottom is for single filers. And again, what this is showing is what percentage, in the middle here, what percentage of our Social Security benefits are going to be taxable given different combinations of Social Security in this top row against other sources of income. So for example, if a couple was expecting $40,000 of combined Social Security benefits and another $24,000 of other income, could be coming out of a pension, could be in pre-tax IRA, well, that combo is going to result in 15% of their Social Security benefits being taxed. The last couple things I'll mention here is the maximum amount of Social Security benefits that can ever be taxable is 85%. So regardless, even if you're got $1 million of income, you're always going to have 15% of your benefits, which are going to be tax-free. Additionally, one shortcoming of this quick reference is it does not take into account tax deductions. Okay, everyone has the option to either itemize or take a standard deduction. In the examples we're going to look at next, I'll show you how that plays into the discussion. All right, the last thing we're going to do is look at some examples using some hypothetical tax returns. I'm going to start by showing you how deductions play into this whole conversation, and then we're going to finish things up by looking at something that we in the industry call the Social Security tax torpedo zone. This is a common pitfall for retirees, so it definitely warrants a little time. We'll finish things up with that. All right, today Charlie and Nancy are going to be our example couple in all the hypotheticals we look at. We're going to assume that they're both retired and 65 years old. In this first hypothetical, I'm going to focus in on how deductions play into this whole conversation. Okay, in other words, as I referenced previously, even though some of your Social Security benefits might end up in that taxable column, you still might not end up owing any federal income tax if you have enough deductions. So let me show you what I mean. Again, let's start with the basic assumption or the basic scenario that we looked at or I highlighted on the quick reference grid. That being Charlie and Nancy are expecting $40,000 of Social Security benefits and $24,000 of other income. What the quick reference grid told us was 15% of their Social Security benefits would be taxable given that combination. Well, let's see what the tax return says. If we go down here on line 4, there's our IRA distribution. We'll say that's what's generating the $24,000 this year. Down here on line 6, we can see the Social Security, $40,000. And lo and behold, there's the taxable portion, $6,000, which of course is 15% of $40,000. Now, the main thing I want to highlight here is, so even though $6,000 is in this taxable column, if we do the simple calculation, $24,000 plus $6,000, Charlie and Nancy have $30,000 of total income or adjusted gross income on line 11. But of course, in the U.S., the tax code lets us itemize our deductions or take a standard deduction, whatever is larger. In this example, we're saying Charlie and Nancy are taking the standard deduction in 2024, which for a married couple age 65 or above is $32,300. Okay. The main thing to understand here is their deductions are higher than their total income. So their taxable income for 2024 in this hypothetical is zero. So the main point, again, I'm trying to illustrate is even though some of their Social Security benefits are showing up as taxable, they still have enough deductions, which ends up meaning they owe no federal income tax for the year. Now, the last thing we're going to talk about today is the Social Security tax torpedo zone. Let me bring you back to the quick reference we were looking at earlier because I think this is the best way for people to visualize where the torpedo zone is. Now, to be clear, this is going to be unique to every individual, but conceptually, basically, here's all you need to know. The tax torpedo zone lies anywhere in this range from 0 to 85%. Okay, in any one of these scenarios, this is the tax torpedo zone. In other words, if you are in this phase-in, okay, where less than 85% of your benefits are taxable, but more than 0, you are in the torpedo zone. And the reason it is called the tax torpedo is because not only does every additional dollar of income get taxed, but it generates more taxable Social Security. So you get this double whammy, which can create a significant tax pitfall for retirees who simply, are unknowing. Anyway, we're going to finish up today by looking at a couple of examples so you understand how this works and know what to look for. All right, back to Charlie and Nancy. We're changing the assumptions a little bit. For 2024, they are estimating, first and foremost in this example, $48,000 of Social Security benefits, and they're going to take $8,000 of IRA distributions, so that's their other income. This combination results in 0 taxable Social Security benefits. Woohoo! Now, the key thing is this is not random. I picked these numbers because they are right at the start of the phase-in for taxable Social Security benefits. So in other words, for every additional dollar that they generate of other income, some of their Social Security will be taxable. So we're going to change the assumptions next, and I'm going to show you kind of the strange effect that has in their total taxable income. Now let's add some extra income to Charlie and Nancy's tax return. Let's try to keep this simple. We're going to say that in addition to what we just looked at, they're also going to generate a $10,000 capital gain in 2024. How does that change the numbers? Well, if we page down here, take a look at line 7, there's our capital gain of $10,000. But now look at what's going on with Social Security. Now we have $5,000 of taxable Social Security benefits. So this is an illustration of what the tax torpedo zone is, or what's happening in the tax torpedo zone. When you take extra income in this zone, not only are you being taxed on that extra income, this capital gain in this example, but you're also getting hit with taxes on Social Security. So you get this double whammy that many people are not expecting. Now, in this hypothetical example, it's not that big a deal because we still have enough deductions to wipe out all of our income, but let's make one more adjustment here to really emphasize the point. Now for this final scenario, let's change the assumption, and instead of taking a capital gain, we'll say Charlie called me up and said, "Hey Ted, I'm buying a new vehicle this year, so I want you to send me an additional $60,000 IRA distribution." Well, how does that change the figures? Let's pan down and take a look. On line 4, there's the total IRA distributions this year, the $8,000 plus the additional $60,000 he's taking. But now look what's happening with his Social Security benefits. Now we're hitting that maximum of 85% taxable benefits. So the key thing I want to point out here is in the original scenario we looked at, where Charlie was only taking $8,000 and the $48,000 of Social Security benefits, his total income, or his gross income in that scenario, was only $8,000 because none of his Social Security was being taxed. By taking this additional $60,000, look at where his gross income is now. Now it's up to $108,800. This is the tax torpedo. $60,000 of additional income is actually resulting in over $100,000 of additional total income. So, when you're right in that phase-in for taxable Social Security benefits, you've got to be thinking about this. Every additional dollar of income can result in additional taxes being owed on Social Security benefits. Now, the last thing I want to mention on the Social Security tax torpedo is once 85% of your benefits are being taxed, you're no longer in the danger zone because you've already maxed out. Additional income is going to have no impact on how your Social Security is being taxed. So, as you can see, this whole subject is relatively complicated. The bottom line is it really just depends on your level of income. Where you really got to watch out, however, is as we discussed, when you're in that phase-in, when more and more of your Social Security is being subject to taxation, you got to watch out for that double whammy of not only getting taxed on additional income, but also additional Social Security benefits. Anyway, I hope this one was helpful. Make sure you check that free resource guide that we talked about. Drop any questions in the comments section. And as always, I hope we'll see you on the next one.